Hello and welcome to Connect, the weekly podcast of the California MBA, featuring one-on-one interviews with movers and shakers in the mortgage industry. I'm Susan Milazzo, CEO of the California MBA, and I'm happy that you could join us today. Before I welcome today's guest, I'd like to thank our 2024 President's Council sponsors. And these are companies that provide a tremendous amount of financial support to the California MBA, in large part so that we can remain the strong voice for the real estate finance industry before the California State Legislature and our regulators. So please join me in thanking this year's President's Council sponsors. And those companies are AmeriHome, Arch MI, CMG Financial, Consolidated Analytics, Funding Shield, Guild Mortgage, and Western Alliance Bank. Thank you all so much for your support. We really, really appreciate it. With that, I'd like to welcome today's guest. I'm happy to welcome back Mitch Kider, Managing Partner of Weiner Brodsky Kider. Mitch, welcome.
Thank you, Susan. I'm glad to be here with you today.
You have been a guest on Connect several times, and so I'm really grateful for your time to be back. I'd love your insights on what's happening in our world right now. Well, I think we'll start with the presidential election. We're fresh off a presidential election, and given the outcome, I'd love to get your thoughts on what regulatory impact lenders should expect.
Okay, well, these are certainly interesting times. I think the regulatory impact that lenders should expect on a federal level is actually going to be quite dramatic. If nothing else, regulators will not quite approach things in the zealous manner that they've been approached in the last 4 years. I think there will be a toned down approach to regulations and regulatory compliance. Now, President-elect Trump has campaigned on deregulation, believing that deregulation will stimulate the economy more. There hasn't been much discussion about consumer financial protection or consumer protection at all, quite frankly, other than a statement about interest rates on credit cards that came out. So I think things will be very different. I think you need to look at first the regulatory side of it, regulations themselves, and then the enforcement perspective and the enforcement side of it. On the regulatory side, as I said, this is an administration that believes that is going to follow the belief that deregulation stimulates the economy itself. And I think that's going to impact everyone. So that's going to be toned down quite a bit. On the enforcement side, it's kind of a mixed bag. You have to look to history to see where we may end up. Now, when Trump was the president of his first term, when he was the 45th president of the United States, his first selection at the CFPB was Mick Mulvaney. And Mick Mulvaney basically calmed down the CFPB and didn't do much of anything, in all honesty. There wasn't any regulatory enforcement that was going on at that period of time, and things were pretty quiet. When Mulvaney moved on to become the chief of staff, actually, to the president, we got Kathy Kraninger. And Kathy was actually a really good regulator. She didn't simply ignore the agency or the tasks that the agency were the tasks of the agency itself. What she did was she regulated based on the law. She looked at the statute, she looked at the regulations that she had in place, and if there was a clear violation, there was an enforcement, and there were a number of enforcement actions during her administration itself. But there wasn't any regulation through enforcement. And I don't think we're going to see that on a going forward basis, regardless of who gets selected to head up the CFPB. I think to the extent that there's regulation itself and enforcement, it's going to be a clear case. Was there a violation of this law or was there not a violation of this law? So on the regulatory side, I think you're going to see a dramatic change, and a change that in many ways is going to be healthy for this particular industry. But there's another side to that as well, and one which you know really well, and that's the state regulatory side itself. And when that happens on a federal level, when the federal government starts toning down their regulatory approach and their regulatory enforcement, states tend to step in. And state regulatory bodies today are pretty strong, and they're doing a very good job of staying on top of this industry. And I think you're going to see more and more of that. And I think you're going to see coordinated approach among the states themselves as they try to regulate the industry.
I think it's a great observation, and I agree with you. Our state, of course, has already demonstrated their desire to do that by our governor calling a special session. So I think that that's a great, great information for lenders to be thinking about as we move into 2025. Artificial intelligence is, of course, top of mind for everyone. We in California saw several pieces of legislation on AI this year, expect more next year. What advice are you giving lenders as to the use of AI in their operations?
So, there's an old adage that says garbage in is garbage out as well. And my advice to lenders is that they need to understand exactly how their system works. They need to know how that algorithm works, what the data input is, and what the output is as well. They need to ensure that the input does not include information or data points that came about because historically there was bias or there was discrimination in lending itself. So that has to be weeded out of whatever's input into the algorithm itself. The output is really important as well. You can't simply go tell a borrower, I'm sorry, you can't qualify for this particular loan product. You need to have reasons why. And if you're going to use AI to assist you in that process, if you're going to use AI to assist you in your adverse action notices, things along those particular lines, you better know the data points that led to that particular conclusion. And you need to know that so that you can articulate that to the consumer. So really, the advice to anyone, I think AI is going to be and is today a great tool, okay? But it's a dangerous tool as well. You need to know it. You need to be able to understand it. You need to be able to get your arms around it and control it, as opposed to allowing AI to control your actions.
Right. Yeah. And I think be able to articulate to regulators in particular, demonstrate that it is not, it's not including any bias in credit decision-making tools.
Yeah.
So that's, our focus, that what we've seen the focus in California is like the use of AI. Well, like you say, let's monitor what it's telling you, because we want to make sure that consumers aren't being damaged by that.
That's absolutely right. And it's going to be interesting to see how this new administration handles AI in general, because there are many in this incoming administration, or at least many advisors to President-elect Trump, that worry that AI is going to displace a number of different jobs. And so I don't think you're going to see an administration that's necessarily friendly toward AI. I actually think you'll probably see more regulation in this particular area, which, is contrary to the approach in general when it comes to other regulatory matters.
Well, this kind of leads me to my next question. We have been very fortunate to have you several times out to California at our Legal Issues and Regulatory Compliance Conference that's coming up in early December, mostly talking on panels about fair lending. So I'd love to hear your thoughts on, what should lenders be thinking about relative to fair lending compliance in this market?
Yeah, so let me start with this basic premise. Fair lending is a civil right. There are two critical statutes that come into play when we talk about fair lending and mortgage lending. And one is the Fair Housing Act, and the other one is ECOA, the Equal Credit Opportunity Act. Well, the Fair Housing Act is part of the Civil Rights Act of 1968. It's something to be taken very, very seriously, quite frankly. And lenders need to understand that regardless of a change of administration, Republican, Democrat, or otherwise, fair lending is always an issue that is foremost in the government's mind itself. For the reason that it is, in fact, a civil right. So lenders need to understand what's required of them, okay? Start with pricing itself. Lenders need to take a look at the discretion that they're giving their loan officers and others to have lender concessions on prices and to lower those prices. and they need to continue to monitor very carefully, how that discretion is being utilized. Okay. Is there one particular group that in fact is not getting the benefit of that discretion as opposed to others? So pricing is very important, and that's going to continue to be a very important issue. Underwriting the same way. You're going to look at underwriting, you're going to look at exemptions, you're going to look at overlays that you put on loans itself. You need to monitor to ensure that a protected group is not adversely impacted by what you're doing. Redlining and fair lending, I mean, this particular administration today, the Biden administration, really came up with this modern redlining theory, okay? And it hasn't really been tested in courts itself. People say, well, maybe the Townstone case tested it. It really didn't test it, because what the Court of Appeals said in the Townstone case was, yes, ECOA applies to a prospective applicant. That's all that they said. They didn't go any further than that. So I don't know what we're going to see in terms of modern redlining claims, but I will tell you this, and that's really interesting. There are probably almost 24 of those investigations still pending at the Justice Department. And even when a new administration comes into place, it's very difficult for them to go ahead and stop those investigations and stop something that's moving forward in its tracks. Sometimes some people will say, well, it's not actually that difficult, but I will tell you, they find a lot of resistance along those particular lines. So fair lending is incredibly important. It will remain important to this industry, and people need to stay on top of the issues of fair lending.
Right. It is, yeah, definitely something that's, lenders need to always have top of mind of, how they're complying with all the various fair lending rules throughout the country and at the state levels as well. Mitch, I've had the pleasure of knowing you for years. I don't know that there's anybody in this industry that doesn't know who Mitch Kider is. You've had a decorated career in this industry. I would love to hear, what advice would you give to, a young attorney starting out in the real estate finance legal representation field?
So what I would say to a young attorney starting out, and we have plenty of young attorneys at our firm that are starting out in this particular area, this is a wonderful field to be involved in. It's very complex, though. You need to take the time to know it, to understand it, to learn it. And you actually need to know a little bit about history. You need to know about housing finance in the United States, how FHA came about, how Fannie Mae and Freddie Mac came about, the reasons they are there today. You need to also understand financing itself. Why are interest rates where they are? People simply look at the federal rate, for example, but they don't necessarily have that understanding that much of the mortgage rate is going to depend on who's buying mortgage-backed securities. Is it there? Is the Fed in that particular business? So my first bit of advice is, if you're an attorney and you're getting into this business, okay, learn the business. Understand the industry that you represent. Understand everything about that particular industry, and then your clients will absolutely appreciate it. Do it only if you're really interested in it and you're doing it for the right reasons. This is an area that has interested me ever since I was in college, to tell you the truth. I worked on housing in the mayor's office when I was in college at the University of Wisconsin. I studied at Washington University when I got my law degree with a professor named Daniel Mandelker, and he was someone that was very much involved in housing finance itself. And then I came to the government and I worked at HUD for a little while so I could learn it even better before I went into private practice. Be committed to it. If you're committed to it because you want to be, and you understand the importance and significance to the country as a whole, then I think you'll have a wonderful career.
That's great advice. Yeah, learn the industry, not just the legal part of it, but the whole picture, because that's really what it takes, right?
That's exactly what it takes. Yes.
That's great advice. Thank you, Mitch. We're very, very grateful at the California MBA for your personal support, helping us on legislative issues over the years, providing your expertise, and certainly the firm's support of the California MBA through membership, participation in our legal issues conferences over the years. Can you share with our listeners why you and the firm choose to support the California MBA?
Oh, absolutely. I'd love to do that. The California MBA is really important. State MBAs are very, very important. I mean, the role of a state MBA is to advocate for their membership. It's to educate the legislature. It's to lobby the legislature. It's to protect the interests of your members and of consumers as well. And the reality is, and I'm not just saying that because we're on California MBA Connect right now, but I don't think anyone does it better than you guys do. And that's the truth. I think you're very, very effective. You happen to be in, one of the greatest states in the country, in my opinion. It's large, it's complex. There's a lot going on over there. As you said, the governor has brought the legislature back to see how they're going to deal with things over the next 4 years. That's going to have a significant impact upon this industry itself. So it's really important work that you do, and you do it really well. And that's why I support it.
Well, thank you, Mitch. I appreciate that. And it was great having you back on Connect, and I will look forward to seeing you here in just a few weeks.
Oh, yeah, I look forward to it. It's great being here with you. Thanks.
And thanks to all of you for joining us today. To access any of our past episodes, you can follow us on our YouTube channel. We're also available on SoundCloud, Apple Podcast, and Spotify. That's it for this week, and we'll see you next time on Connect.
Here we go.